Hey traders, this is a post-Powell market recap. Today we had the FOMC statement at 2 p.m., but that was vastly overshadowed by the press conference. When we do not have expectation for any decision on the rates to be made, meaning the expectations are firmly in the camp of no cut, no hike, no move whatsoever, in this case, no cut, then everything really goes to any changes in the rate statement and any changes we might see in the tone of Powell when he's taking the questions during the press conference. Now this here is the Fed statement tracker from the Wall Street Journal. If you go to Google and you Google Wall Street Journal WSJ statement tracker, this will be a link you get. And what we have here is the entire statement from the Federal Reserve with the updates, what they've removed, what they've added, highlighted. And this gives you an idea of what is a baseline message that's just tweaked from press conference to press conference, or I should say from FOMC statement to FOMC statement. Then, of course, what's really important is the way in which what Powell says backs this up on the same day. We get the statement and Powell echoes what was said in the statement. And then when we get the FOMC minutes later, the next thing the market checks are the minutes in line with what Powell said and this statement. So this is a pretty important thing. You can check it out again if you Google WSJ statement tracker. One thing that Powell did really, really well is that he made very clear that if the jobs picture starts to deteriorate, if it looks like this elevated period of time of the higher rates rather than the cuts is starting to hurt jobs, that I think non-farm payroll this Friday, that could change the way in which we should expect the rate cuts. So very simply, Powell, in not so many words, said if NFP is a disappointment, we miss, it's lower than expected, look for July rate cuts. Look for July rate cuts. He also took hikes off the table. You know, one of the things that's been sort of an irritant is Michelle Bowman, FOMC Bowman, talking about potential rate hikes. He pretty much dismissed that, and hopefully that puts an end to the conversation that's been persistent the latter part of April, which is the Fed's going to hike. So I'm really pleased that he definitely pushed that aside in this press conference during the Q&A, because someone asked him directly about Bowman's comments. So that was great. That's out of the way. Equities have been rallying into the close. Now, what's really interesting, and you can see this is 3:24 p.m. Eastern. What's really interesting, though, is if you take a look at bonds, the long bond, they went up. Here's your 2 to 3 o'clock candle, and they are coming back down. So it will be interesting in terms of what is the closing sentiment, what is the closing momentum after this event, meaning Powell's press conference. You can see the 10-year, not just the 30, but the 10 also pulling back a little bit. So in order for bond traders to be convinced that if non-farm payroll is a miss, if we're guessing non-farm payroll could be a miss, then that then pushes expectations for rate cuts in July higher. We would want to see ZB, ZN a lot stronger than they're showing at the moment after a pullback. I'm still interested in the same places I've been interested in for about a week now. I'm still interested in things like gold. I'm still interested in things like GDX. I'm still interested in longs in places like Chevron and Exxon. We're still interested in the XME, but more specifically Freeport-McMoRan as it tracks with copper. So those are still places we absolutely want to take advantage of. Remember, this week's swing window is not only Powell today, but going into non-farm payroll on Friday. We are still very bumpy on a lot of these trends. This is far from a look of Freeport that says it's up, up, and away. This is far from a look on Exxon that says it's up, up, and away. In fact, Exxon's still struggling, and I really would not mind at all to get long Exxon in the gray zone. And then Chevron, which is the number 2 weighted stock within the XLE. Again, it looks like it wants to go, but take a look at this 1 hour chart. It really hasn't gone anywhere. And that just brings one more thing to mind. We need to be more nimble. A lot of you have noted, especially in the room, hey, Rob, some of the short-term day trades are working really well and the swings are starting to struggle. Now, we are just coming out of a prolonged period of time, over 3 months of really the day trading not keeping pace with the account growth of the swing trading. And this has to do with the chop and the lack of follow through. What's going to be so important is not get to the point where we are entering for quick little moves. Remember, on average, let's think about commission and fees as we wrap up this update. On average, you're going to pay 65 cents to $1 per contract when you are trading options. So we have to think about backing that out from the profit. Now, if I make a 20-cent move, that's $20. And per contract, let's use the $1 commission, which is pretty common with things like Tasty and interactive brokers. That's a common $1 commission. Some are less, but that's pretty common. So back out that commission. Now, if you trade 3-4 contracts, that's $3 or $4. So remember, there is a cost to trading, right? I'm not even talking about other fees that we should be thinking about offsetting with our gains. But let's really be realistic about not wanting to focus on 10, 15 cent wins, although there's nothing wrong with that. But we'll end up really kind of churning in terms of return on time and return on sort of effort, right? It's just not just, return on capital. So keep that in mind. I don't want to shorten our trading to such a scalpy type mindset. Now look, when the bot scalps, she actually looks for trends. You could get some decent follow through. So keep that in mind, because when we start getting back in line, what we're going to see is we're going to start seeing more follow through where we can get much better day after day, session after session continuation. And that is what we're lacking right now. And that is frankly why the day trading has been pretty good. We'll get right back to it. We've actually had a pretty good couple of weeks of day trades. Yesterday was phenomenal with Freeport McMoran and gold, but we'll look for more opportunities like that. We should get a little bit of a reprieve with the calendar tomorrow, but then Friday, right back into non-farm. Hope this helps. As always, leave any comments below the video if you have any questions, if you have any feedback. In fact, we have 2 emails for Sector Secrets. If you want to share a win with me, with the group, send it to success@sectorsecrets.com. If you have feedback for me, Rog, what do you think about this? Feedback, this is your room as much as it is mine. Please feel free to send it to feedback@sectorsecrets.com. I'll see you in the next update.